Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of just around 64,000 AUD. That's made up of the 38,000 AUD in my stake portfolio and the 25,000 AUD in my Vanguard portfolio. Today I'm going to go through the recent Apple earnings and Amazon, as they're both two holdings that I have in my portfolio. Amazon is obviously a very small position that I was considering exiting, and Apple is one of my biggest. So first I wanted to go through Apple's recent earnings. Obviously, if you're an Apple investor, it's had a bit of a rocky time recently, but with their recent reports, as you can see, Apple stock soars 6% on record $110 billion share buyback. Apple reveals $110 billion buyback, but the sales drop less than the feared to $90 billion, and AI plays a big role in the new releases. The iPhone maker is rushing to patch up fragmented confidence in a series of blows that have bruised the share price to a 7% decline this year. Apple stock rose 6% in off-market trading after logging a 2% gain in the regular session on Thursday. The iPhone maker posted a revenue that indicated another quarter of slowing growth, but not as slow as analysts had expected. The tech high-fly reported a revenue of $90.8 billion in 3 months to March, down 4% from a year ago quarter, but above the $90.3 billion consensus views. The sales to cash cow product. iPhone amounted to $46 billion, down 10% from the $51.3 billion picked up the same quarter last year. All that was good news for investors had been pricing in worse scenarios given Apple's struggles in China, troubling headwinds at home, and a falling share price. Apple stock is down 7% this year, while other big tech peers such as Meta are breathing a rarefied air of record highs. In the bet to fuel confidence, the company Apple announced a monstrous $110 billion share buyback, the biggest ever. It's also raised its quarterly dividend by 4% to 25 cents from 24 cents. Mac sales arrived at a surprisingly high 4% increase to 7.5 billion, while iPad revenue dropped 16.7% to 5.6 billion and slid below estimates of 6.9 billion. Wearables, home, and accessories included the new Apple Vision Pro mixed reality headset, picked up 7.9 billion, a 9.6% drop. Also, if you're a big tech CEO, you might consider throwing an AI to your forward guidance look if you haven't already. It is effective. We continue to feel very bullish about our opportunity in generative AI, Apple boss Tim Cook said on a conference call. We are making significant investments and we're looking forward to sharing some of those very exciting things with our customers soon. Obviously, having a look at Apple stock, this is one of the positions I've held for the longest time. I believe it was actually the very first stock I ever purchased, and currently I own around 18.3 shares. So I'm up around 28% or 748 USD, and my average share price is around 142. So recently I did actually buy in. I bought around this little dip here, and it was not a bad time to buy in as it's obviously shot back up. But if you take a bit of a long-term approach, or a bit of a longer-term approach, as it said, in the last 3 months, the stock is still down 2.5%, and it's only up 11% this year. Obviously, the stock was on an amazing run at this time towards the back end of last year, and even got to highs of around 195. The stock is then sold off for this year, but as it is one of my biggest holdings, I have been looking into it, and there's a reason why it is one of my biggest holdings. Whilst Apple might have had a slow year in terms of sales, like it said, the stock still bounced back, and it is becoming a bit of you'd almost say like a value company with that massive share buyback announcement, which pretty much just means that they're still going to be looking out for shareholders and they're going to be buying back the stock now, pretty much so everyone gets a bigger piece of the pie almost. Obviously, I'll assess this again in the future, decide whether I want this much exposure to Apple. It's my second biggest individual stock holding behind Microsoft. Obviously, my 3 ETFs are a lot bigger, but I don't mind being in Apple. Obviously, the way I look at it, in 5 years, I still see the company will be here. I still think it will be making money. And yeah, in the last 3 years, obviously, it's up around 40%, so decent returns. But I'll keep tracking and I'll keep showing updates on how it's going for me. And obviously, as I look through the earnings, the big thing obviously was the $110 billion share buyback plan that they announced. And I think obviously with slowing sales, that's something they had to do. Next is another holding that used to be a lot bigger for me, but it is quite tiny at the moment, and that is Amazon. The stock has had an amazing year and start to this year. It's up 9% in the last 3 months, and it's up nearly 80% in the last year alone. And their recent earnings did them justice and was very good. So I'll go through that. Amazon profits more than triples, topping Wall Street estimates. Amazon shares rose in extended trading hours. Advertising revenue grew 24% in the first quarter, and Amazon Web Services also reported results that topped estimates. Amazon reported better than expected earnings and revenue for the first quarter, driven by growth in advertising and cloud computing. The stock ticked higher in extended trading, and this is how the company did. The EPS was 98 cents versus the 83 cents expected, and the revenue was 143 billion versus the 142 billion expected. Amazon Web Services was 25 billion versus the 24.5 billion, and advertising was 11.8 billion versus the 11.7 billion. Operating income soared more than 200% in this period to 15.3 billion, far outpacing revenue growth. The latest sign that the company's cost-cutting measures and focus on efficiency is bolstering its bottom line. AWS accounted for 62% of total operating profit. Net income also more than tripled to 10.4 billion, or 98 cents a share, from the 3.17 billion or 31 cents a share a year ago. Sales increased 13% from 127.4 billion a year earlier, and Amazon expects to continue jump in profitability for the second quarter, but at a more measured pace. The company said its operating income will be 10 billion to 14 billion, up from the 7.7 billion a year earlier, and revenue for the current quarter is expected to be 144 billion to the 149 billion range. Amazon said representing growth of 7% to 11%. But yeah, obviously you can go through and keep reading. It's had an amazing recent year. Like it said, its big thing around the profitability. The company had laid off more than 27,000 employees since late 2022, with the cuts bleeding into 2024. During the first quarter, Amazon let go of hundreds of staffers in its health and AWS business, and it's kind of really had a big pivot towards profitability. Like I said, I barely own any shares in this anymore. I really considered buying more into it at a point, and I've kicked myself for not doing so. Obviously, my tiny position is up 40% in such a short time, and I really probably should have added more. I should have gone through and looked at it, but even if you go in the last 3 years, the stock is actually pretty flat in terms of it's only up around 7%. So if you were buying in 2022 or 2023 when it was kind of going through this, you'd be loving it right now. In terms, like we said, it's nearly up 80% in the last year. So this is definitely something I'll keep my eye on, whether I want to just exit it because this tiny position really doesn't change anything in my portfolio, or maybe grow my position going forward. But I'll track that and I'll keep posting updates on whatever decision I decide to make. But good news for both my holdings. It's overall been a good earnings season. I'm now up around 25%, which is around 5,125 USD. And just today alone, I'm up 456 USD. My biggest positions are still obviously VOO, and that's sitting at around, I'll get it up here, 12,420. And then it goes to Microsoft at 4,566, and then Apple, and then the rest are kind of the smaller ones that make up the rest of my portfolio. My recent additions, I did buy more VOO. So I bought a chunk more VOO because I want to get this to 50% of my overall portfolio value. So I'm pretty much there. Overall, I'm just dollar cost averaging into this ETF. I chose this ETF because it tracks the S&P 500, and I've been buying this for ages. I'm now up to 26 shares, and as I keep buying more and more in, obviously my dividend payments are getting bigger and bigger, and at the moment I'm up around 1,860, and my average share price is just under 400, but that's again because I'm just consistently dollar cost averaging in. I'm not too worried about that. This is a bit more of a long-term approach, and hopefully in 5, 10, 15, 20 years, this will be worth a lot more than what it is now. I just wanted to quickly show as well for in terms of dividends. For my Vanguard portfolio, I recently got $223 of dividend payments in, and we can have a quick look at my Vanguard portfolio. Overall, that portfolio, like I said earlier, is sitting at $25,080. That's made up of the 12,523 in my VLC position and the 12,347 in my VGS position. So I've got exposure to both Australia and international. Obviously, my Vanguard portfolio returns haven't been as good as my stake, but I kind of use this portfolio as a bit more long-term, a bit more dividends with the franking credits. And if I do need money, I will be taking it from this portfolio. For example, if I'm going to go for a house or something like that. Going back to my charts, you can kind of see how my dividends have been tracking. Obviously, they're getting bigger and bigger, which is the kind of the main goal, especially my stake portfolio. You can see it's slowly just trading up a bit more consistently. My Vanguard is obviously quarterly. So my goal for distributions for my Vanguard portfolio this year was to be over $1,000, which I believe I'll be on track for. And then my stake portfolio, I really don't care about dividends. I just reinvest it all, but it is nice to get them as a bit of extra money into my pocket. In regards with my portfolios, you can see how things are looking now. Obviously, with my American portfolio, you can see with my recent investment into VOO, it's now up to 49%. So it's almost at that 50% mark. So I'm happy with that. And then the rest is all made up of my individual stocks. So again, the goal is to keep 50% as in the ETF so I can get the overall market. And then with my remaining 50%, I can kind of pick ones that I hopefully think will be winners. And I can track them and do YouTube videos and so on with these two portfolios. My American portfolio is a bit more diversified than my Australian one in regards with individual stocks, but my Australian portfolio tracks a bigger range of companies with those two massive ETFs, especially VLC, which tracks 20, and then VGS, which tracks nearly 1,500, I believe it is. In regards with the valuations of them, this is one of my favorite things to look at. Obviously, I've been slowly investing, and it can be a bit hard at times because you don't actually see the money that you're investing, but doing this, it's nice to see the kind of progression slowly up on both the portfolios. And obviously, I just did a recent buy-in to start off this month. So at the end of this month, I'll insert those values into there and we'll get another update. But again, the goal is to hopefully get these portfolios to around 80,000, maybe 85,000 before the end of the year. As I'll be going on holiday for a month as well and I have other things coming up. I think it should be reasonable. I'm sitting at around 64,000, so hopefully a strong returns this year from the market will help. But I plan on just consistently investing in, and it'll be massive to hit these amounts, and then hopefully next year I can break the $100,000 mark. And I've been doing these videos tracking this pretty much for years now, it feels like. And it's nice, even when I look back at some of my old portfolio videos where I was sitting at like $15,000, $10,000, $20,000, and now to see it's sitting at basically under 64,000, pretty much 64,000, is really nice to see. And hopefully I can keep tracking these videos and keep making these videos to help myself stay accountable and invest this money. So that's all for now. I just wanted to cover Apple's earnings and Amazon and my thoughts on that. Cheers.